Switching gears a bit to a better story. Tesla CEO Elon Musk has a spring in his step today. That's because the company crushed second quarter earnings estimates and is driving full force to join the S&P 500. Let's break down all the details with Garrett Nelson. He is senior equity analyst at CFRA. Garrett, good to speak with you again. Help us understand this. Tesla shares have now slightly turned into the red. It was a really good quarter for Tesla. If they are added to the S&P 500, what happens to the stock?
So I think what you're seeing this morning is a sell the news reaction. The stocks had a huge run up, obviously, for several months now, but especially since early July when they reported their second quarter vehicle production and deliveries number. That's when the speculation really started, the expectation that they would post a GAAP profit for Q2 and thereby meet that last remaining hurdle for inclusion into the S&P 500. So there's been a lot of buying over the last few weeks, a lot of buying from retail investors. You look at the Robinhood activity, a lot of investors, hoping that this would happen and looking to sell their shares to other investors, namely index funds that would have to buy the stock if it is included in the S&P 500, which now looks inevitable. The problem is it's probably going to be some time, either weeks or months before that actually happens. So do you hang on to the shares, in that time period, or do you sell them? And I think you're seeing some of those investors sell them this morning.
But Garrett, is that potential? Garrett, go ahead, Alexis.
On the earnings call, we heard CEO Elon Musk talk about wanting to make the cars more affordable so they could reach a wider number of people. How challenging, difficult is that going to be for Tesla to do, and what would it mean for their bottom line?
Sure. So they're already doing that. Recently, they've announced price reductions on all four of the vehicles that they currently produce. Most recently, it was the Model Y, which of course now accounts for a major percentage of their overall volume. So, they just announced that recently. We think that's kind of a red flag. They just introduced this vehicle in March and they're already lowering the price, just 4 months later. We're seeing some other red flags surrounding the story. For example, a big drop in vehicle registrations in the state of California, which is by far their largest market in the U.S. So, that's why we lowered our opinion to the stock to a sell on Friday. In the note we put out last night, we raised our price target to $1,220. But, we do see downside over the next 12 months. We still like the story long term, but we think, the stock has kind of become decoupled from fundamentals and it's gotten ahead of itself. So we're looking for a pullback in the near term.
But Garrett, let me get back to the S&P 500 inclusion. Do you think it could be a powerful catalyst, though, to the stock? I understand your price target. Definitely, I get it. But is the stock, let's say, 20% undervalued? That is a lot of fund activity that will have to step in there and likely buy this stock.
We would argue that there's been a lot of buying over the last few weeks, ever since their second quarter production and delivery report. So, we think there's going to be profit taking. The other factor here is there's been a lot of short covering. If you look at Tesla's short interest, it's only 7.5% of shares outstanding. A year ago, it was over 23%. So there's been a major short squeeze here. That's been a big factor contributing to the run up in the stock over the last several months. And also, we view this as a story stock. This is a stock that's a company that's had an unprecedented string of positive news flow for months now. And our question is, really what's next here? Like what's the next catalyst in the near term? If you look at the quarter, they wouldn't even have posted a GAAP profit if not for this automotive regulatory revenue that they posted for the quarter, which was $428 million. If you look back, that line item was only $183 million on average over the prior 4 quarters. And that's revenue. That's importantly, that drops right to the bottom line. There's basically no cost associated to that revenue. So that's why they post the GAAP profit of 50 cents for the quarter. Overall, we consider it a low quality beat for the quarter. Their CapEx was the highest it's been in 2 years. for the quarter, and also their free cash flow was down 32% year over year. They're entering a major CapEx cycle with the construction of the new factory in Germany and also near Austin, like they announced last night. And that's going to really weigh on the company's free cash flow for the next several quarters.
So all that you just laid out so nicely, you would think would give investors some pause here. And we're not even talking yet about all the companies breathing down Elon Musk's neck, right? You've got Nikola, you've got Ford out with the new Bronco and the new F-150, trying to chip away at those Cybertruck sales. Should Elon Musk and investors be more worried about that?
So we're seeing a huge increase in competition. You're exactly right. GM has laid out a plan to go all electric. Ford, for example, their Mach-E electric vehicle, we expect to sell very well. That will be available later this year. Overall, there will be about 20 new electric vehicles introduced in the U.S. in 2020. So, they're facing competition that they haven't faced really before. So, that's another concern of ours.
Garrett, I see at the bottom of Tesla's earnings release, some new big, beautiful factories coming online. They have all these amazing new vehicles getting ready to hit production, vehicles that might someday soon be fully autonomous. Let's look 5 years out. Is Tesla a $1 trillion market cap company 5 years from now?
So when people ask, well, should I buy the stock? Should I buy or sell? Importantly, our price targets are based on a 12-month view. So, in 12 months, we see the stock at $1,220. However, if an investor has a longer term, a 5, a 10-year view, I would be much more positive on the story. Clearly, there's a huge opportunity in electric vehicles and autonomous driving. I do think Musk has overpromised on, them getting to full level 5 autonomy by the end of this year. We've seen that promise before. Back in 2014, in fact, he said that they would get there sometime in 2016. And here we are 4 years later. And, based on our research, there's still a lot of hurdles that they need to overcome to get to full autonomy. So we don't expect that here by the end of the year, as like Elon Musk recently promised.
Before we let you go, you guys, did you raise your price target on Tesla after the earnings call?
We did. So we raised it from $1,100 to $1,220.
So you are still bullish overall on the overall story at Tesla.
Long term, we have a sell opinion. Our 12-month target is $1,220. Longer term, though, I would say that there are a lot of positives surrounding the story.
All right, I'll leave it there. Garrett Nelson, Senior Equity Analyst for CFRA. Always good to speak with you.
Thank you.